Hello, everyone. Welcome to SPAC Chat. I'm Karen Snow, head of East Coast listings here at Nasdaq, and it's my great pleasure to be speaking with Betsy Cohen, serial SPAC sponsor. Betsy is a pioneer and legend in the SPAC space, having built an incredible franchise with successful business combinations like Card Connect in 2016, International Money Express in 2018, and today Pioneer and Perella Weinberg in the works. Betsy, welcome.
Thank you, and I'm delighted to be here, Karen.
Let's start with understanding what makes FinTech Acquisition Corp different. What's your secret sauce?
Well, I think that we are, as a group, entrepreneurs. We have been entrepreneurs. We've been operators of fintech businesses, and we have been very active in the capital markets. So we bring a range of expertise to our companies. But I think most importantly, we bring a sense of alignment and partnership and a real commitment to bringing to the marketplace good companies that have outsized growth, but that have good business models and excellent management that want to take the next step of growth and be supported in the public markets.
That's great. So can you talk a little bit more about the alignment? And then also, how do you evaluate your targets?
One component of the alignment is reflected in the fee that we get paid. And that fee, of course, has a certain component that is paid up front, but most of it is paid as the company becomes more successful on the public market. So we're aligning our interests with our investors' interests, with the company's interests, with management's interests, and we think that's very important. So I think that we have introduced this so-called staggered promote in 2015, 16. And it was an extension of our partnership idea that we were doing this together.
So when you think about targets themselves, what advice do you have for them as they evaluate their sponsors? And what do you think are the most important considerations? You talked about alignment. What are some of the other things that you think that targets should be really thinking about as they partner?
I think Target should be thinking about the sponsor's experience. And perhaps the same sponsor is not the right sponsor for every target company. But the experience within the SPAC structure is a critical piece because SPACs look easy, but they're very difficult to actually bring to conclusion. There are any number of factors, including some that no one controls, the market movements, investors' concerns about a particular vertical, all of those things, because the SPAC period is a several month period. And so navigating those shoals of changes comes really from experience, understanding how to present a target company to an investor audience, and not only an investor audience, but the right investor audience. So all of these things come from experience. We like to say we're doing our 8th and 9th SPACs. And so I think we've lived through many different circumstances and learned from each one of them.
That's great. Great advice. And when companies are considering, dual tracking, which I think most do, what would you say are the key benefits to going the SPAC route versus a traditional IPO?
Well, again, I have to say that it's not right for every company. There are companies, mostly those that are focused on the consumer market, for whom an IPO might be a branding exercise as well as a a way to get to the public markets. But for many, many companies that need to raise both capital for the company for its next stage of growth, and who may have been in business and supported by investors over a long period of time. Many of our companies are between 10 and 15 years old. The opportunity to tap into liquidity is in fact a critical element, and one can raise significantly more capital in a SPAC than in an IPO. I think the additional factors are time to the market, which is quicker with a SPAC, and the ability to test in a very orderly way investor sentiment about the company, the sector, the valuation, all the elements, have that kind of one-on-one interaction. It benefits the company as it goes to market, and will look to those investors to support the company over the next 2 to 5 years.
Lastly, what do you make of the burgeoning SPAC IPO market?
Well, it's very exciting. I think, as I said before, a SPAC looks like an easy thing to do, but it's not. So I think there will be some fallout. There will be people who run into problems they didn't anticipate, but there always are. That's true of IPOs or direct listings or any other market entry point. I think we should not look at the number of SPACs that are being formed today alone. That is a phenomenon. But we have to look to the other elements involved. One is the number of really growth companies in what has been a growth economy. And in the technology area, what is dependent upon adoption, not only creation of the product, but adoption of that product. And one has seen since 2000, maybe 2005, the adoption curve of both consumers and businesses go up significantly. So this is the time when they're mature, or mature enough, where they have an appropriate corporate infrastructure, where they've worked out their initial blunders in the marketplace, and everybody has them, and where the trajectory for their growth is much, much clearer. Sometimes we find that a creator or a founder is not the right CEO for a public company. So having recognized that internally and made that change might be a signal that this is a company that's ready to make the transition. There are many, many more of these companies available in the marketplace today than there were 2 years ago or 5 years ago, or certainly 8 or 9 years ago.
Yeah, that's certainly true. Very insightful. Betsy, thank you so much for your time. Any final words of wisdom before we sign off?
Only that you have to do what you know, and that targets should look to sponsors who know what they're doing.
Betsy, it's been an honor to have you here with us today, and our best wishes for your continued success. And that's it for SPAC Chat. See you next time.